Good morning, everyone, and welcome to the European crossover webinar. And you can see we just had the Eurozone data pop through right now. Came in at 55.5 for market manufacturing flash PMI, as well as services came in at 47, and composite at 49.8. Still waiting for Italian data, as usual, running late. Is that data? Earlier, we did have UK core CPI come in down 1/10. Year over year was at down 1.1%, or at 1.1%, I should say. And we had PPI come in once again. UK PPI came in 2 hours ago. That came in at 0.2. And as we started rolling into the market manufacturing flash PMI for France came in at 51.1, a little bit stronger than what was expected. We got German flash PMI came in at 58.6. Wow, that was pretty strong compared to what was a Reuters poll was 56.4. Wow, the euro's at 22.07. Holy smokes. Holy smokes. And let's see here. We got obviously new highs in the Nasdaq. And let's see, later on today, at the top of this next hour, we'll get Eurozone Eurostat trade number. And then as we come to the States, we'll get retail sales at 8:30 Eastern, along with Canadian CPI data and market composite flash and manufacturing flash, both at 9:45 Eastern. That should move the market a little bit. And of course, we have FOMC today and AHB housing at 10 a.m. Eastern. So let's got retail sales. There we go. Just want to take a flash of this. And let's put this here. And take a look here. Here's the cash dollar index. We're actually at support right here. I think I had it marked as 90.19, but obviously I guess it's a little bit lower than that 90.15. I thought it was 90.19. But that was our bias chart support for today. I believe. Let's see. Want to take a look at the euro. Wow, the euro. Holy smokes. Above 122. We talked about this in the chat room. Can't be fighting the Fed. And look at this thing. Just blowing and going. 2206. And take a look at, actually we're looking on weekly data and still trying to find out where the number would be now. Let's see, the bottom there is 2214. So 2214. That is appears to be 22.14, maybe 22.17, but right there. And actually Confluence is here, but there's a whole bunch of little wicks there. You even have this wick here, which is 22.32. And that's a good little Confluence there. On up to about 22. This next wick right there, that's 22. 22.37. So 22, 22.14, and there's going to be, and that's actually a weekly close. A body open there, which would be 22.42. 22.42. So, wow, what a move. And we'll take a look at the cable. Pretty good move there, up in the stars. Where's the Aussie dollar? Still pushing up higher. Look pretty tired. Let's take a look at the Kiwi. Sheesh, look at that. Two gravestone dojis. It looks like it's going to run out of gas and poof, pops right back up. Well, now we're not above the highs, but we're still solid move up in here. Take a look at the Nasdaq. Irene says, "Can you please take a look at Apple? Thank you. I want to buy more of Apple today." Sheesh, man, Apple. We'll just take a look at that right now. I was seeing that they're increasing their production by about, I think it's 30%. That's what really kicked it into gear. So we're actually looking at Apple here. Man, look, we're above this resistance too, which is 127.13. The daily, resistance right there is 128.87. 128.87. And if we're looking on a weekly, man, this sucker's on fire. Oh, because it says on 30 minutes. Okay, let's go to the daily. That's a weekly open right there. 27.83. There's some good resistance, but not good resistance, but some resistance here. So looking at the daily, you got that open there, and that's 27.59. See that 27.59? We're above it, and then the close on there, which would be 29.05. 29.05. So let's go here. Well, there's your resistance right there. Just call it 29 because it's 29.05. That's your resistance right now. Now, if you throw a fib on it, 78% is 3042. Now that's going to be key. It's 3042, the 78%. So maybe if they, I don't know, the way with this Fed could be, maybe we try and jump up there and then we stall and then we can pull back. But that might be over a couple of days. So we'll see what happens. But that's interesting there. Let's go on and make a notation here. That's going to be a target that they could go for. So initially it's going to be this 129, and it could get up as high as 3042, with that being the 78%. And that is essentially 103 to the high of 138. And that is key to look at. It's good that Irina brought that up, because this has been the real big mover. And I try to tell people not to fight that. I made my money early on in the morning, although I missed that extended move, but I wasn't willing to go in and chase or go after stuff because I was afraid that this thing could turn around, and sure enough, it did. And that's what I was trying to tell people. Don't try and short this thing as it kept moving higher. And some people did just that. And you can see what's happening. Only because I've been in that same situation. So right now, if it had been me, I'd been short from some time back, blah, blah, blah. So I know I've been in that same situation. Didn't want to be there. And that's what I'm saying. Don't stand for the Fed, because there were too many things that were already going with the market. That's the problem. Was you had the Santa Claus effect. Then you already have the market was already doing very, very well. Besides the Santa Claus effect, we talked about this yesterday, and we'll go to this. And that's what I was coming up with it. And I mentioned that and even shared the chart. Bear with me. And you can even say the same thing for the euro to a certain extent, and I'll get to that. So I posted this chart yesterday in the chat room, and I was saying, hey, look, it's clear to see it's in a bullish mode. And I'm the kind that likes to sell against, rally, blah, blah, blah. But like I said, I've learned the hard way, and you have to respect the technicals. But the thing is there were so many things going for this market. Not only the Santa Claus effect, then you got the Fed. Then one of the reasons that I was a little bit late to party last week was coming short was I was like, hey, I know that they're going to have that stimulus that's headline. And when we came into the beginning of the week on Monday, the market had kind of played it down a little bit because, yeah, they were going to get it done. But there was, they're looking at doing two stimulus bills, how they're going to do it. And to me, that was, well, that's not very positive. But the market was still okay on Monday, and then we kind of, came back a little bit. But my thinking was, there's too many things going for this market. I mean, how much are they going to play into that stimulus thing? I don't think it's that big of a deal at this point. But here's the problem. It's like a car kind of rolling down the hill or in a little bit of a slope. You don't need much push to get the car going. You see what I'm saying? So the trend is already much higher. I mean, we're already close to all-time highs. We're solidly, still pushing up here. Portfolio managers, I've seen that they're holding, the big ones are holding, saying, hey, it's going to push higher, blah, blah, blah. So that unless we break, my thought was we'd have to break this 462 and open lower. I mean, we have to break 462 and hold here in order just to neutralize it, not turn on a fill sell mode, but to neutralize it. And so we came back yesterday, and here we are pushing. And then you got the Fed. So it's all rolling. Like I said, if you got a little bit of a slope and you have to push a car, well, you don't have to put too much effort to get it to go. And that's what I'm saying is it won't take much. Stimulus headline. Well, I don't think it's gonna be all that great of a stimulus, but it won't take much to get it going. one of the things was when they thought if Biden got elected, we'd have a bigger stimulus. Well, if the Democrats uh, take the 2 Senate seats in Georgia, they would have control of the Senate with Kamala Harris as the splitting vote. But once again, like I said, we didn't get those big Senate pickup seats that we thought. So that's what I'm saying is everything's like, oh, it's not as good. But you're thinking, what the heck is the market still doing here? But that's what I'm saying is everything's kind of going its way right now. I've been, in situations where people I'd be like, oh, the market can't go any higher. They keep talking the Santa Claus effect, and it just goes higher. But everything's going its way, and that's what I was saying is when you looked at yesterday, and look how we came to the 78%, and we faded back, and then they came back. I'm like, wow, if this ain't close above the 78%, this can't control it. Just keep on going. And look, it did, and we did get a nice little push here. And look, instead of fading right here against 12,696, we just keep pushing higher and higher. So everything's going its way. You can't really fight it, and that's my take on that. So let me take a look at the S&P. So yeah, I'm glad I didn't do anything silly like trying to sell this doggone thing. I'd be, singing the blues. Let's take a look on the same 2-hour chart. Still looking pretty solid too. And bear with me. So we'll go and take a look at the FX and all that. And Amira wants to look at the natural gas. We'll take a look at the natural gas. Let's just cover the FX stories. And right before we jump into the FX, we'll take a look at the natural gas. So hang on one moment. Let's cover those. Let's see here. So Australian New Zealand dollars hold near peaks as commodities shine. The Australian New Zealand dollars held near multi-year highs on Wednesday as the prospect of a vaccine-led global economic recovery underpinned the assets and commodity index. Now I saw some people not talking, but in the chat room, someone was saying they posted this thing about, I don't know, there was some they did a screenshot of some Twitter account thing that said something about like the Fed's so overdone, blah, blah. Look, here's the deal. They've been singing that tune for years, and the market still keeps going higher. Oh, it's about the Fed. They can't, the traders can't get enough. It's like, they even said like cocaine. They need some more. Look, they've been singing that song since Moses crossed the desert. It's been years. Every time I keep hearing, oh, it can't go any higher. They just have to keep feeding the junkie. Look, it is what it is. The market still keeps going higher, so there's no sense rationalizing it. You just accept it. If you just accept it, there it is. Anyway, moment. So I got something in my eye. Anyway, so they're near multi-year highs on Wednesday as the prospect of vaccine-led global economic recovery underpinned risk. Oh, and that kind of led me to that because once again, it underpinned risk, blah, blah. People might say, well, that's already been old news. It doesn't matter. Everything's going the market's way right now. So there's no sense trying to fight it. And that's what I was thinking about here, what you saw here. Or let's say we look at it a different direction, look at the dollar. One thing I've learned is, and I've learned the hard way too when I would fade moves, is these markets can go and go and go, and they'll just keep pressing. And like what you're seeing with the cash dollar index. And it's like, but everybody already knows that. That's old news. Isn't that already priced? It doesn't matter. They just keep pushing it for all it's worth. And as we go into the end of the year, portfolio managers are just loaded that way, and they're going that direction. So you're not even standing in front of the train. You're standing in front of one of those, multi locomotives. I mean, it's just crazy. So the Aussie stood at 75.54, up from 75.08. Kiwi not far from its recent high of 71.20. Aussie took a knock on Tuesday when China confirmed a ban on Australian thermal coal, an ongoing trade spat. Daniel Hines, a unit commodity analyst, a strategist at ANZ, noted China had taken around 30% of Australia's thermal coal exports in 2018, but had fallen to around 10% in October. Australian exporters have found additional buyers in South Korea, Vietnam, and Japan. Blah blah blah. I really don't want to talk about this. That's just I'm not really interested in what's going on with China, other than one of the net headlines that did come up, and that's what I'm kind of keying on right now. And I thought, man, this can hurt the dollar. I did see this. The This was in the Asian session. China reduced its holdings of U.S. debt in October by 7.7 billion, the fifth consecutive month of reduction. The total amount is 1.05 trillion, hitting a new low since January of 2017. And I thought to myself in Asia, I go, man, that's going to be bad news for the dollar. I mean, I'm thinking it's going to be bad news for the dollar because it's really going to go on and there's going to be less demand for the dollar. So we're going to probably hurt the dollar. And on top of that, we're coming into the FOMC, which they're expected to be, very supportive of the market to a certain extent, or supportive in policies to go on and keep things flowing. So sure enough, we're seeing that with the euro right now above 122. That's the thing that caught my headline, or caught my attention, I should say. So that's why I'm not so interested about the trade spat between China and Australia. I could care less about that. That doesn't mean it doesn't do anything for me. So let's go and move on to this. So the dollar capped as U.S. leaders meet on stimulus. Pound underpinned by Brexit hopes. And I was even thinking about if they do get the Brexit deal, that's probably good for risk as far as equities also. That's what I'm saying. It's the old glass half full effect. I mean, whatever you see, that's what they're just going with. Anything, if they say, I think Amira said, there's a blizzard in New York. It's like, fantastic. There's a blizzard. Buy equities. I'm just saying it doesn't matter. It's just they're going to find any excuse. But we will get to the natural gas as soon as we go over these stories and right before we get into FX, Amira. But anyway, so the dollar languished near 2.5-year lows on Wednesday as progress towards a massive U.S. government spending bill and COVID. There is not going to be a massive bill. We already know that now. I mean, compared to what they were expecting. And that's the saying is, even though we're not getting anywhere with what we're expecting, which is going to be one of the reasons why we get this bigger move, we're still moving higher. That's what I'm saying. It's almost doesn't matter what it is. So also supporting the sentiment, the U.S. expanded its rollout of the vaccine from Pfizer and BioNTech, blah, blah. The British pound held on to more than 1% of its gains on Tuesday following a report that an elusive Brexit trade deal may now be close, even as Prime Minister Johnson repeated that the most likely outcome was no deal. The dollar changed hands at 21.63, near 2.5-year low of 21.77. Because of all the positives that hit the market from the vaccine to the stimulus, we're seeing dollar weakness across the board, said Bart Wakabayashi. Yeah, that's what I'm saying, everything. And to me, this headline really could be wrong, but this headline really greased the wheels. I mean, allowing for the dollar to really slide. Because now, now you'll have less demand for dollars, essentially. You know what I mean? So there you go. Top congressional leaders began a second meeting on Tuesday to finalize. Well, I guess now they're looking at 1.4 trillion in spending. Well, that's pretty good, Dan, I have to admit. Investors also keep an eye on the outcome of a two-day Federal Reserve meeting on Wednesday. Policymakers are expected to keep the key overnight interest rates pinned near zero. Here's the deal. I want to jump back. I mean, I had an okay day yesterday. It wasn't like remember I covered before we really took the dip. I didn't make a lot, but you know what? I'll tell you what, I was happy to get the heck out of Dodge. Even though we did take this little extra dip, and I was like, oh, wow. They did go in and come down here. You can see, once again, it's all about the levels. Look how they came to 469. I think the low might have been maybe 2 ticks higher, but I'm saying if they came back, I'm like, wow. But the point is, I'm glad I didn't stand the way. And I said, you know what? Don't stand in the way of this stuff. So that's what I'm saying. You can't fight it. Just take whatever the market will give you, and then that's it. And then I was saying, whenever we do finally start to see a break, then I'll try and ride prices out for a while. But I mean, for now, I come in the morning, I try and hit it real quick. What I thought would see a bit of a pullback as we came with. Remember, I was saying back on Monday, I said, I think they're going to the 78%. But I hate just buying up near these highs. I guess I should just, picked up and bought on dips. But that being said, I'll just wait till you get those setups, and then you can jump in and then grab what you can take. Better to get a little bit than to get nothing, or worse yet, have a loss. So the focus is whether the Federal Reserve will extend the duration of bonds it buys may have to in light of what's going on, because then they really probably whack the bond market. I think the chance of the Fed doing so is relatively low, and that we could see the dollar bouncing back if the Fed avoids that, said Yujiro Goto. Well, that's something to keep in mind. Guess we should save that as a. I'll probably save this, but that's something we want to keep on. Obviously, if they don't do the bond buys, that's going to be dollar supportive. So let's see here. There we go. Now it's saying the former support now is 91. I had 91.19, but it's actually, I guess it was 91.15 with that level I had. But you know how they can blow past a level and then they come back. So we'll have to see. I guess it's going to depend on what the Fed does. So let's cut off this. Now we'll jump to the other screen. We'll take a look at nat gas for Amira, and then we'll start on the analysis. So let's take a look at natural gas. They're not reacting too much as far as Blizzard. And that's got to be a little bit of a worry here. And I can tell you right here in Texas, I'm in Central Texas. It's been cold. I haven't had the heater on, and it's been cold for a few days. So, you know what? I mean, I would have expected it probably to be higher, but I guess it doesn't mean with Natty, doesn't mean it can't just all of a sudden out of the blue sky just jump up in here. But the key thing, we are holding this level right here in nat gas, which is 261 so far. The real key is right there. This body right there, more recently, that's 259.7. It's called 259. But the key thing is now going to be, because these are based on the levels of the previous month. Now we've moved up, so that's why they're changing. Let's move this here. The key right now is to get above 275.6, or called basically 276, and important right now on the short-term basis is for it to hold 259 right there. That's where we're at. But we can get going if we can get past 276. I am a bit surprised we're not higher right now. It's actually coming off these lows, but you know what? Natural gas has been falling quite a bit. So could we see a bounce? Well, let's take a look at a fib real quick for something they could shoot for. Like a 38%. I think this is probably like at a 23% right now. Yeah, there's a 20%. So oh wow, look at that, Amira. The 38% is 276, and guess what? That's resistance. So if they want to go there, there you go. There you go. So the 38% is going to be at 276, and guess what? Resistance is right there at 276. Oh, that's really huge. So that might be an area that they want to go to, but you know that's going to be key. Not only is it a resistance level, it's also going to be the 38%. So they could maybe gun some stops. Doesn't mean you short against that, but I mean the market probably, if it's able to, it'll kick up above there. Would probably shoot up to like this next level, which is right there, that body touch, which is 282. But they'll probably take a little bit off at 276. That's if we get kicking up there. So with that, let's go on and get into the analysis. Let's take a look where we're at. Let's go to the euro dollar. And let's go to so we know we've got looking at 22.14 immediately. I guess it's 22.17. Yeah, 22. Well, I guess this is called 22.15 and 22.42. So, and that's pretty good resistance at 22.42. There's a lot of touches there. So let's pull up the Okay, UK manufacturing PMI came in at 57.3 versus expected 56. Services 50.7. Well, came in at 49.9 versus expected at 50.7. The manufacturing did well. Okay, so let's move this here. Oh, and let's take a look where Apple is. Apple's at 128.70. So remember, for Arena, resistance is at 129, and then that level we're looking at, what was it, 130 something? We can go back to that, but anyway, that's where we're at right now, pre-market. Doggone, this Apple's still chugging along. So in the euro dollar, we're going to be looking at going to one. Let's do this, 17/42, and support. Man, oh man, oh man. Now, if they don't do the bond buys, it's going to be supportive. So support would be really right there, 2102. Cable. Man, this thing's still going. Holy smokes. We had 3503. We're already there. We support 34.9. But you can see, so we go with probably the dollar's under a lot of trouble. Having some trouble right there. So we'll stick to what we had, which is 3503. It's above it right now, though. 3503 is what we had. And on the downside, we'll go with these two wicks here. You see that? That's 34.39. Aussie dollar. Man, oh man. Look at that Aussie. Well, resistance does, I can't talk. Resistance is going to be right there. The high, which is 75.78. And support was 74.68. Let's use that. Support would be right. Actually, just going to be, I don't think it should be at 75.18. It's just going to be this bottom from yesterday, which is 75.03. Kiwi. Is just going to be there. The highs 71.22. I have to respect what's happening with this dollar this morning. Support 70.15. The previous lows you can see here from that day. And this wick here, 70.55. Let's go to the dollar CAD. Looks terrible. I do have monthly support at 26.67. 26.67 and resistance at 27.19. So this is monthly support, 26.67. It's actually a level, and 27.19. And oh, we're actually at support. I think we had 1882. So hold on. Broke back lower on Tuesday, closing at weekly support level 1989. Support will be 1982 with resistance at 2002. Onto the dollar yen. Everything looks terrible dollar wise. Dollar yen broke low on Tuesday, closing below 375. Support on Wednesday will be 343. Well, it's even below that with resistance at 429. Well, we have 343, but look, we have to go with this body right there because we're seeing something significant with the dollar breaking, and with the Fed, they could push lower. Now, we could rebound back, but support's going to be that body open right there, which is 326. And resistance would be that body right there. I don't know if that's high enough, 381. Right here to this wick, just above that. And also confluence is almost with this wick here, there, and still not very high, 390. Dollar index, this thing's a dog. Truly a dog. That was my, you see here I had 9019, but that's, I put, and that's even in my thing here. 9019, but that level is not 9019. That level is 9015. So it wasn't that much difference, but it was 9015. And resistance would be, I guess, 9084. Actually, it has to be a little bit higher right there in case we turn things around. We'll go with 9093 if things turn around. Where they'd have the first pushback. Onto the QEN. No changes here. 73.08, 73.77. So no changes. Euro pound. Today's low so far has been 90. Boy, things, look how much this thing, boy, this thing is wild as can be. We'll just go with the wicks right here. You see that? That's going to be 89.98. And resistance, who's to say, but I'll go with this wick right there. 90.85. Euro odd. No changes here. No changes. They did come back. Now, you know what? I'm wrong because look, they came back to touch weekly support again here. So it is going to be that weekly support, which we had before. We updated it because it looked like things were going to start to try and pick itself up. So back to weekly support, which is holding right now, and resistance, just with these wicks here, which is 61.43. Euro Kiwi. Bit of a mixed bag here. We had 71.50, but once again, we've pressed lower with this. It's kind of surprising. So this is interesting. The euro is doing real good against the dollar, which is just a dollar weakness across the board. But it's not like as if it's taken off against the Kiwi. Interesting. the lows, I was just going to say, you see this body open there? That's going to be support, and that's essentially where they found it. 70.94. Resistance. Just go with the bottom right there of that body, which is 71.74. Onto the Aussie yen. No changes here. 77.92, 78.52. Onto the guppy. Boy, we are all over the place on this thing. Man, oh man. Resistance is going to be that body right there, which is 140. And support is going to be right there. If we break them, you see right here and here, these two confluence. It would be a test all the way back. I'm not sure if that, but things are going well for sterling right now. We'll take a look at a 2-hour chart. Obviously, right here, then 38.86. Sterling odd. Jake Sherman confident that confident that a stimulus deal will be reached within the next 24 hours. It just keeps. I mean, that just keeps an undertone bid for the equities. I mean, we can look for 38% on this. It's probably pretty close to it anyway, or not. Let's take a look. Yeah, well, that's where we're at, the 38%. I'll just go with that, 78.42, which is 38%. And support is going to be really this body, which is just a hair above that level, which is 77.46. There we go. And we'll take a quick look at the euro. I like this 22.15, that level right there. So, and then of course this was 22.17, then 42, a little bit of on the stretch. There's some good touches at that 42, as I showed you. Look at a weekly chart. There's some good touches coming across right in here at 42. But it just goes to show you, you see, even though that's pretty key, this is kind of scary because we're above the 78%. This is scary in the sense that this market, come Friday, we need to be below that 21.44. We got the 78% there, and we have that 21.45 weekly level. That's a bit scary if we close above this. We need to see this thing kind of reverse back. If not, this market's going to want to go on a weekly level. They're going to want to go for 25.52. We'll take a look at this. So there's those touches. We're looking at a weekly chart right now. These touches here, and there's 2284. Look at all these touches here, 2284. That's solid. But man, oh man, if they close above 2145, at the very least, they'll challenge 2284. And they'll probably want to go as high as 2352. See, the dollar would just be sliding like nobody's business. And that bond story, it really kind of keeps things going. We'll have to see what happens. I would not be rushing on any trades unless you're just long equities when the FOMC gets. I think you got to wait. This is a one time. I'm not going to touch stuff. I'm going to let the dust settle because this could easily get kind of banged up a bit. But that's where we stand right here on this, on the euro. And we'll go back. Lastly, we'll finish up with Apple. So remember, it's 129.05 and 130.42. And right now, in the after hours, we're trading at 128.57. We're almost right there, 29.05. And then 130.42 is a 78%. All right, well, that's what we have. Thanks for joining us here on the European Crossover webinar. And Didier says it looks like a bit of a cup and handle. Let me take a look at the daily. We'll take a look at what Didier says. Hold on. I'm not very good at cup and handles, but yeah. Let's go to the daily. Does look like that. And what is it with the cup and handle? You take the extension from here and you add it on there. I think it is, or no, here and here, and you add it there. So this would be, was it 116 to 119.48, plus you tab that, and that would put you at 22.48. Well, remember we got our resistance is 22.42, so maybe so. You might have something there. Yeah, I know. Not Apple, but the euro. And that's what I'm saying. I'm looking at the euro right now. So if you look at this and you take from essentially here, basically 1948 to 16 even, add 348, and that'd be 3. Well, I guess it would take even further. Adding 3 would take you to 22.48. And add a little bit more, get you up to that 22.82 then. Okay, well, thanks for everything, and we'll see you in the chat room and get the bias chart posted.